Good afternoon, everyone. This is Keith Johnson, CPA, with your Business Beat for May 16th, 2021. It's a little relaxing weekend. Yes, it is the day before tax day. And yes, there will be a lot of last minute filers coming in tomorrow. But, I've already filed all the extensions and pretty much I know who everybody, at least my clients, I know who is who and when they usually file after a couple of years. I know who my August clients are, I know who my July clients are, and I know who my October clients are. So, just making sure everything has been extended, everybody who's been filed has been filed, following up. And actually, in our case, what we're doing tomorrow is we've been doing it over the last week. Is we are CPA. We're a CPA firm for the Florida Tax Credit Scholarship Program here in the state of Florida. And basically, what that is, it's where businesses and individuals donate tax credits to the state for doing various things, and of course, they get a generous tax deduction. But what it does is it funds scholarships for low-income families and those with special needs. So it's a good thing. We've been doing it about 10 years now, and we've had a good time. We've slowly built our school base. We're up to almost a dozen schools now. Usually the testing is done over the summer, but we do have to verify the students. And so this week we'll be busy visiting the schools and getting the students verified. But most of the testing's in the summertime. And actually, Governor Ron DeSantis of Florida just signed a bill last week, right here, actually, just a couple miles from where we are, to expand some of the programs that are covered. So, which is good for everybody. It's a win-win. We lower the threshold for families to qualify went up substantially. So that means more families, which means more students, more educational opportunities for children who do not have a background, in private school education. And I can't be. I got to be honest. I can't lie. I'd be remiss in saying that it doesn't help us too. It does help us quite a bit. So we are happy with that. But it is a good program. We've done it for 10 years, and there are some very good schools that we do. In fact, some of the best schools here in Jacksonville, such as Episcopal and Bishop Kenny, and they're very big private faith-based schools. They participate in this program. So sometimes you have to do your homework like everything else. If you're a parent, to find a good quality school. That's with any school. So but they are out there, and they do take these. So we're glad to do it. But the filing deadline is tomorrow, so that means that you have to have either a return into the IRS by tomorrow, or have an extension. At this point, it'll carry you through October 15th. The penalties that are there if you don't file just depends on your situation. If you have a refund coming, the penalty is zero, zip, zero, zilch. There is no penalty for filing late if if the government owes you money. Now you have 3 years from the original due date, which is tomorrow, 3 years out, to file to get your money. But the IRS does not charge penalties or interests for those returns that have a refund back to the taxpayer. Where the IRS will get you is if you owe tax. Now, this is not where you owe the tax, because most people owe tax, but they have the withholdings to cover it. In this case, what we're talking about is the final tax bill after withholdings, after estimated payments, and so forth. So let's say, yeah, you might owe $10,000, but you might have $9,000 withheld. So at the end of the day, you might only owe $1,000. Okay, so let's say you don't file by tomorrow. There's three major things that will happen to you. The first is what's called a failure to file penalty. What that means is you didn't file a tax return on time. That's a biggie. That's 5% of the tax balance, the final tax balance per month for up to 5 months. Now, so going back to the example where you owed $10,000 after you did all of your deductions and credits and all that, but you had $9,000 withheld, so you had a final tax bill of $1,000. That 5% penalty does not go against the $10,000. It only goes against the $1,000. I mean, that's still $50. That's still, that's still a good chunk of change, but it certainly is a not a it's unless you owe a lot of money, it's not catastrophic. Another penalty which is assessed is the failure to pay penalty. Now, this case, the failure to pay penalty is 10% of the failure to file penalty. It's 1/2 of 1%, so 0.5% of the final balance due. So in this case, it would be $25. Or I'm sorry, for a $1,000 tax bill, it'd be $5, and that is accumulated per month for up to, I believe it was 12 months. I think it's 10 actually. I apologize. So anyway, so that they start accumulating on May 18th. So yes, you want to make sure that's in, and of course, interest starts accruing on Tuesday, the 18th. Interest being the on the balance. So you're looking now. The good part about interest is it's only 3% per year. So if you had that same $1,000 balance, you're only looking at $30 per year, and then so that works out to about $2.50 a month. It's not that much. Now, of course, back in the days of 1980, who could forget those days? It was, you had 20% interest rates and 20% double-digit inflation. Bad time to live in. I remember those days well. But so it's not like that right now. But we will get to inflation in a second. But so what we do a lot of times is, we'll advise our clients, at least we'll get you filed. Now, sometimes what we'll do is we'll say, okay, we'll file the extension, and we have to feel them out. Say, okay, how much do you owe? How soon do you think you can pay it? Because different abilities to pay the tax present different strategies. But usually, what we'll do is sometimes we'll have a client that will be they may owe $5,000, $6,000, $7,000. They don't. They may not be able to pay right now, but give them a couple months, and they can move the money around and be able to pay, or save up the money to pay. So in a situation like that, what we'll do is we'll file the extension, so at least they avoid the failure to pay, the big one, 5% per month. And then, we'll advise them. We'll say, look, it's going to cost you 1/2 of 1% per month plus 3% per year on interest. And we calculate the penalties and the interest that they can expect. And usually it works out pretty well. And then we'll file the extension. We'll hold the return until they contact us, June, July, August, whenever. Because they're good until October 15th, and they'll say, go ahead and file, and then we zip the return out. So if you're in a situation where you owe, but you think you're pretty sure that you can get the money to pay the tax, in the next 90 to 120 days. Um, you might, for a pretty small cost, you might just want to go ahead and file, excuse me, file the extension, take a little penalty, but you'll be still considered fully compliant. So anyway, if you have any questions, please feel free to reach out. Now, I did mention the good old days of 1980-81 before, where we had all those double-digit inflation and interest rates years. They came out on Friday with 4.2% year-over-year inflation, which was by a wide margin, the most that we've seen since the Great Recession. September of 2008 was the last time that we've had inflation that high, and that was for a pretty brief time. Over the last 30 to 35 years, inflation has been only at roughly anywhere between maybe 0.5% to about maybe 2 to 2.5% annually. Now, with the caveat of that's with the reported inflation. Of course, medical inflation has gone up much higher than that. Tuition inflation, college tuition has gone up much higher than that. But for most goods and services that you run into every day, the percentage is about 2%, and that's what the Fed wants to see. They want to see generally a thing of about 2% per year. You don't want to get deflation. Deflation would be okay in the short term, but it can lead to a vicious cycle in pricing and wages. We don't want that. Main reason for the 4.2% inflation is that there's a lot of supplier bottlenecks out there because people don't want to work. I've said this before. Inflation is when too many dollars chase too few items. Okay, well, problem here is with all these stimulus payments and unemployment checks that are going out to people, and they rather stay at home and not do anything than go out and work. That results in a lot of money getting into the economy, but the problem is nobody's working, so there's no production. The productivity is not there, and as such, the prices go up because a lot of this is in the supply sector. It's not in the demand. It's not on the demand side. I think if we can get people back to work, back to full employment and full participation, I think we'll be in good shape. It'll still take most of the summer to wind that down, though. But the thing is, the bottom line is, people, we saw this coming a long time ago, and as a result, people are, people act shocked, and like, if you've been following it, for a long time this was going to happen. So the good news is a lot of states are now cutting out or reducing their unemployment benefits. They're given roughly 4 to 6 weeks lead time, so they're not just cutting everybody off cold turkey. And I kind of agree with that, but now they're getting to the point where it's like you're either cutting the benefits outright or at least forcing people to prove they're out looking for a job. And if they get offered a job, then they lose the benefits. So I think it's the inflation's going to be around a while, but I mean it's not. I don't think it's a long-term thing. I think we'll probably see a higher than normal inflation environment probably through the summer, but I think by the end of the summer, going into the fall, I think we'll be back to where we were. So hopefully things are well. and I will, there we go. Just had a screen pop up, my tax screen. I hate those things where, they just time out on you. It's like, they just interrupt everything. By the way, I don't know if you can hear in the background, we are under construction. Yes. One of my new employees, Juco, is kind of unpacking a few things. So you may be hearing a little clanging in the background. That's her. She's coming on board in about 2 weeks, 2 weeks from today officially, when school gets out in here in Jacksonville. Of course, we already have wonderful Pam Earls here. So we're growing, we're doing well, and we're blessed to do that. So, you know, but there's always room to grow and get better. So, if you have any questions, reach out to us. If not, we will talk to you tomorrow about the latest news and what's going on. Take care and have a great day. Bye bye.